So I was reading Berkshire Hathaway's annual report, and wow, Buffett really lays it all out there, doesn't he? I mean, he even admits to mistakes.
He does, doesn't he? It's pretty refreshing, actually. He mentions using the words mistake or error 16 times in his letters from 2019 to 2023. A lot of companies avoid that kind of honesty. It's like they're allergic to admitting they're not perfect. It's
Exactly. He even calls out Amazon for being all happy talk and pictures in their reports, although he does acknowledge they made some candid observations in 2021. But he also notes that he has been a director of companies where using the words mistake or wrong were basically forbidden in board meetings. I mean, that sounds incredibly stressful.
yeah, that taboo creates this illusion of managerial perfection, which is just unrealistic, right? Buffett even said it made him nervous, though I guess there could be legal issues that make limited discussion advisable.
So he also talks about Greg Abel taking over as CEO eventually. It's wild to think about someone else writing those annual letters, isn't it? He mentions Greg shares the Berkshire Creed that a report is what a Berkshire CEO annually owes to owners.
Right. And that Greg also understands, and I quote, if you start fooling your shareholders, you will soon believe your own baloney and be fooling yourself as well. It's all about transparency and accountability.
Completely. Then there's this incredible story about Pete Liegl. Who is that exactly?
Pete Liegl founded and managed Forest River, an RV manufacturer. Buffett says Pete contributed billions to Berkshire's wealth. What's so remarkable is how the acquisition went down.
Oh, yeah, tell me about it. I remember reading something like this.
Buffett got a letter from an intermediary saying Pete wanted to sell to Berkshire and even included the price he expected. Buffett liked the no nonsense approach.
I love that. No beating around the bush. He spoke with RV dealers, set up a meeting, and Pete brought his wife and daughter.
And Pete apparently told Buffett he wanted to keep running the business, but wanted to ensure financial security for his family. Then he drops the bomb about some real estate he owned that wasn't initially included.
So Buffett, being Buffett, just accepts Pete's valuation without even getting an appraisal.
Exactly. He says he expressed no need for appraisal by Berkshire, but would simply accept his valuation. Can you imagine that happening today?
Seriously. And then he asks Pete how much he should be paid, saying he'd accept whatever number Pete gave him. That's insane.
I know, right? Pete apparently paused and then said he looked at Berkshire's proxy statement and didn't want to make more than his boss. So he asked for $100,000 a year.
Haha, Buffett was floored. But Pete did ask for a bonus of 10% of any earnings above what the company was currently delivering.
And Buffett agreed. Just like that. No complex negotiations, no drawn out legal battles. They went to dinner and, as Buffett puts it, lived happily ever after.
That's an amazing story. It really shows how much Buffett values integrity and straightforwardness.
Absolutely. He even admits that he expects to make mistakes about the businesses Berkshire buys and the people he deals with. But he also highlights the pleasant surprises, like the potential of a business or the ability and fidelity of the manager. It's kind of like finding a hidden gem.
And he emphasizes that a single winning decision can make a breathtaking difference over time. He mentions Geico, Ajit Jain, and of course, Charlie Munger.
Yeah, those are some serious home runs. Speaking of people, Buffett also mentions he never looks at where a candidate went to school.
Really, that's pretty unconventional, especially in the business world.
He says there are great managers who went to famous schools, but also plenty who benefited from less prestigious institutions or didn't finish school at all, like Bill Gates.
That's so interesting. I guess innate talent trumps formal education. In his book, he gives the example of Ben Rosner, who apparently never went past sixth grade, but was a retailing genius.
It just goes to show you that you can't judge a book by its cover, right? Buffett even says he believes a large portion of business talent is innate. Like Pete Liegl, he considers him a natural.
All right, now let's move on to Berkshire's actual performance, right? How did they do last year?
Well, Buffett says Berkshire did better than he expected, even though 53% of their 189 operating businesses reported a decline in earnings.
How did they manage that?
He credits it to a large gain in investment income as treasury bill yields improved and they increased their holdings of those securities. Also, the insurance business had a major increase in earnings, thanks to Geico.
Geico. He mentions Todd Combs reshaping Geico in a big way.
Yes, increasing efficiency and updating underwriting practices. Buffett calls Geico a long-held gem that needed major repolishing and says Todd has been working tirelessly to get the job done.
Makes sense. And the property casualty insurance pricing strengthened too, right?
Yeah, reflecting a major increase in damage from convective storms. Buffett even wonders if climate change might be announcing its arrival. But he also notes that no monster event occurred in 2024.
So he's thinking about the potential for a really huge insurance loss someday. That sounds ominous.
He is. He says someday, any day, a truly staggering insurance loss will occur. And there's no guarantee there'll be only be one per annum. It's a good reminder of the risks involved in the insurance business.
Now, I'm curious about the numbers. I mean, what did Berkshire actually earn?
Okay, so Berkshire recorded operating earnings of $47.4 billion in 2024. Buffett emphasizes this measure over GAAP mandated earnings because it excludes capital gains or losses on stocks and bonds.
Got it. He's focused on the long-term performance of the underlying businesses, not the short-term fluctuations of the market.
Exactly. He believes gains will prevail over time, even though the year-on-year numbers will swing wildly. He even says their horizon for such commitments often involves decades.
Wow, talk about playing the long game. That's a key difference between Berkshire and a lot of other companies.
Definitely. And it's those long-term purchases that make the cash register ring like church bells, as he puts it.
I love that analogy.
Okay, so here's the breakdown of the 2023-2024 earnings. Insurance underwriting was $9.02 billion in 2024, up from $5.428 billion in 2023. Insurance investment income was $13.67 billion, up from $9.567 billion.
And what about BNSF and Berkshire Hathaway Energy?
BNSF was pretty flat at around $5 billion. But Berkshire Hathaway Energy improved from $2.331 billion to $3.73 billion. Other controlled businesses were around $13 billion each year.
All right, so things seem to be mostly going pretty well. What about taxes?
Oh, that's a huge part of the letter. Buffett makes a big deal about how Berkshire paid more in corporate income tax than any other company in the US.
Really? How much did they pay?
$26.8 billion. That's about 5% of what all of corporate America paid. He contrasts this with 1965 when Berkshire didn't pay a dime of income tax.
That's an incredible turnaround. So what's the secret to their tax success?
It's all about reinvestment. Buffett points out that Berkshire shareholders have only received one cash dividend in 60 years. They've endorsed continuous reinvestment, which has allowed the company to build its taxable income.
So they're essentially foregoing short-term payouts for long-term growth and tax benefits.
Precisely. It's a testament to the power of compounding and the benefits of a long-term perspective. Buffett even jokes that he can't remember why he suggested that one dividend payment in 1967.
I think Berkshire shareholders can rest assured that their money is being deployed in equities, whether controlled or partially owned businesses. So do they prefer owning businesses or just holding stocks?
Buffett says they're impartial and will invest wherever they can best deploy capital. Sometimes nothing looks compelling, but infrequently they find themselves knee-deep in opportunities.
Got it. So it's about finding value and deploying capital effectively, regardless of the investment vehicle. He mentions Greg has vividly shown his ability to act at such times, just like Charlie.
And he acknowledges that Berkshire's size diminishes their flexibility in the market. They can't just come and go on a dime. It can take a year or more to establish or divest an investment.
He makes a comment about how some commentators currently view Berkshire's cash position as extraordinary, but stresses that the great majority of their money remains in equities.
Yes, he said that Berkshire shareholders can rest assured that they will forever deploy a substantial majority of their money in equities, mostly American equities.
I found it interesting that Buffett mentioned that paper money can see its value evaporate if fiscal folly prevails, and that fixed coupon bonds provide no protection against runaway currency.
He's always been a fan of businesses that can cope with monetary instability because their goods or services are always in demand.
And this all ties back to his belief in American capitalism, right?
Exactly. He calls America Exhibit A and says the country's progress over its 235 years couldn't have been imagined by the colonists in 1789.
He highlights the importance of savings and the wise deployment of capital in driving societal output and economic growth.
And he acknowledges the scoundrels and promoters who try to take advantage of people's savings, but emphasizes that even with that malfeasance, America's savings have delivered incredible results.
So he sees Berkshire as playing a small part in the American miracle by reinvesting earnings and contributing to the country's economic success.
Absolutely. He emphasizes that Berkshire wouldn't have achieved its results anywhere but America.
Then he mentions Berkshire's core business is P/C insurance. What does he mean?
He is speaking about property casualty insurance, and he said that it continues to be Berkshire's core business.
I see. So what is his view on the P/C insurance business?
Buffett explains that in P/C insurance, they receive payment upfront, but only learn the cost of their product much later, sometimes decades later. He says that it carries the risk that the company can be losing money before the CEO and directors realize what is happening.
So it's crucial to have a good understanding of the risks and to price policies accordingly.
Exactly. He mentions that Berkshire is not deterred by the dramatic and growing loss payments, and it's their job to price to absorb these and unemotionally take their lumps when surprises develop. Also contesting runaway verdicts, spurious litigation, and outright fraudulent behavior.
Well, it sounds like a complex and challenging business. He says that it's part art, part science, and is definitely not a business for optimists. I like how he mentioned what Mike Goldberg said. We want our underwriters to daily come to work, nervous but not paralyzed.
He likes the P/C insurance business, and that Berkshire can financially and psychologically handle extreme losses without blinking. Also, that they are well situated to utilize the substantial sums P/C insurance delivers for investment.
I think that now is a great time to remind our listeners to like, share, and subscribe to our YouTube channel so that you won't miss future content like this.
Definitely. A small but important exception to our US-based focus is our growing investment in Japan.
Can you tell me about it? What's so special about these Japanese companies?
Well, Buffett says they operate in a manner somewhat similar to Berkshire itself. They are Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo.
And what does he admire about them?
He likes their capital deployment, their managements, and their attitude toward investors. They increase dividends when appropriate, repurchase shares when sensible, and their top managers are less aggressive in their compensation programs than their US counterparts.
Okay, makes sense. So he invested in these companies for the long term?
Yep. He says they are committed to supporting their boards of directors. At the end of the year, Berkshire's cost was $13.8 billion, and the market value totaled $23.5 billion.
Sounds like it's been a pretty successful investment so far.
I expect that Greg and his eventual successors will be holding this Japanese position for many decades, and that Berkshire will find other ways to work productively with the 5 companies in the future. Disclaimer: we advise investors to check with certified experts before taking any investment decisions.
Great point. So, what's the plan for the annual meeting in Omaha?
The annual gathering will be on May 3rd. He also talks about a book that will be for sale called 60 Years of Berkshire Hathaway.
Interesting. He mentions his sister, Bertie, and makes a joke about her cane.
Yes, he mentions that Bertie is now 91 and they talk regularly on Sundays using old-fashioned telephones for communications. He jokes about how she told him that she enjoys an additional benefit in that men quit hitting on her. So it will be interesting to see if this is true.
Haha, he always has some interesting anecdotes to share. Overall, it sounds like he is looking forward to having everyone come to Omaha and predicts that they will have a good time and likely make some new friends.
He did finish the letter with thanks to Uncle Sam, and that someday his nieces and nephews at Berkshire hope to send larger payments than they did in 2024.
Well, that was quite the deep dive into Buffett's letter. I think it's clear that Berkshire Hathaway is a unique company with a long-term focus, a commitment to transparency, and a knack for finding value where others don't.
Absolutely. And it's all guided by Buffett's principles of integrity, common sense, and a healthy dose of skepticism.
So, what do you think are the key takeaways from this year's letter?
I think the main themes are honesty, long-term thinking, the importance of reinvestment, and the enduring power of American capitalism. Also, the continued importance of P/C insurance to Berkshire's success.
Makes sense. It's a reminder that building a successful business is about more than just chasing short term profits. It's about creating lasting value for shareholders and contributing to the overall well being of society.
Couldn't agree more. And it's always a good idea to learn from the best, even if it can't all be Warren Buffett. So, what are you looking forward to seeing in next year's letter?